If you're a retired homeowner over 62 years with limited income, a reverse mortgage could be right for you. Using the house as collateral, a reverse mortgage converts accumulated home equity into cash, helping you cover basic month-to-month living expenses. Let's look at some of the benefits. This loan gives you several options for receiving funds, including a lump sum, line of credit, or regular payments. In addition, disbursements are typically tax-free. A reverse mortgage allows you to stay in your home without making monthly mortgage payments. And closing costs for a reverse mortgage can be rolled into the loan, reducing out-of-pocket expenses. The benefits are clear, but how do you know if you're a good fit? To start, you'll need additional income to afford monthly expenses in retirement. Tapping into home equity is one way to reach this goal. To tap into your home equity, you have two primary options: sell the house, or take out a home equity loan or line of credit. Selling the house doesn't make sense if you want to continue to live there, and obtaining an equity loan or line of credit can be challenging. If your goal is to remain in your home, tap into equity and avoid the hassle of an equity loan or line of credit. A reverse mortgage could be a good fit for you. Want to learn more? Homebridge can help. Contact Homebridge today to learn how a reverse mortgage can unlock additional income.